And it's another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Competition Authority of Kenya issues a stern warning to landlords and estate managers blocking competing internet service providers from tenants. And the Zanzibar government is in advanced discussions with Egypt Air to launch its first ever national airline. And gold prices fall to two-week low as Israel-Iran ceasefire erodes safe haven demand. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets there. Earlier, we're tracking oil, and we're seeing a little improvement there, $69.22 a barrel, but it's still a big drop, compared to where we're coming from. WTI crude, that's U.S. grade, $66.41 a barrel, a little big 3.07% drop there. We see President Trump there. He's saying that the ceasefire is on right now, but we did get breaking news from Israel that they are saying that Iran has disrupted the ceasefire deal there, but we're seeing the impacts there on the market playing out gradually. Let's get a check on what's happening with metals. See gold prices, they've dropped more than 1% to touch a two-week low today after President Donald Trump's announcement of the ceasefire between Israel and Iran. And we're seeing a big 1.62% drop there for spot gold, $3,340. U.S. gold futures, that followed to 1.60%. And the only green light we have there is platinum, 1.57% jump, $1,304 per ounce. And spot silver, following what we're seeing with gold, palladium also down 0.16%, but still holding up at the $1,000 psychological level. All right, let's get a check on other metals now. According to the Economic Intelligence Unit, copper price is expected to increase by 3.85% to about $9,500 per ton in 2025 from $9,148,000 per ton in 2024, owing to some price movements there driven by U.S. Policy decisions. Well, joining us now to unpack this, we have Ajibola Ayodeji as an analyst with Financial Derivatives Company. Great to have you, Ajibola.
Good afternoon. Thanks for having me.
So what impact could this price increase, what would that have on global manufacturers, and countries like Nigeria, particularly in the real estate sector? What are you seeing?
Okay, before I answer your question, I would like to say this, that metal is a very essential metal, which is used in construction, it is used in manufacturing, it is used in construction, it's used in real estate, it is used in electrical and electronics appliances, it's used for making it is used for renewable energy and all that. So an increase in the price of copper, and we are seeing an increase in the price of copper because one, there is increased urbanization globally, there is increase in investment in renewable energy, there's demand, more demand than we have than supply. So that's why we are seeing the increase in the price of copper. However, for manufacturer, there's going to be an increase in input costs for manufacturer, for people that manufacture all these things and everything. So, and we will see an increase in the price of the byproduct or the product that is made from this copper. And for Nigeria, there will be an increase in construction costs, and there will be an increase in rent, which will bring about increase in rent and mortgage. So that we might be seeing an increase in rent, a further increase in rent and mortgage prices.
Yeah, definitely. I'm sure tenants don't want to hear that, at this point. But we know Nigeria possesses, significant untapped copper ore deposits, estimated at over 10 million metric tons, particularly in states like Nasarawa Plateau and Zamfara State. What would you say are the bottlenecks here, stopping Nigeria from capitalizing on this resource?
Okay, Nigeria is a country that is very rich in natural resources. However, we fail to tap into these resources. Why? Because one, there's lack of investment. especially when it comes to copper that we're discussing. There's lack of investment. And what are the things that is causing this lack of investment? Is one, there's regulatory uncertainties, and there's the issue of security, which debar people or investors from coming into this sector, because we saw that Zamfara, Nasarawa, and Plateau, they are places that are very rich in this copper, so and they are prone to insecurity issues. So because of these issues, it makes the investors, it's debar the investors from coming into that part. That's one. Another thing is the issue of access to road and rail network. Nigeria is very poor in this aspect, and when it comes to processing facility, we have not invested more in processing facilities, and Nigeria is not given incentive for exploration, which is giving room for illegal exploring of all these resources and all that. So those are the bottlenecks that have contributed to, and the electricity aspect also is part of it, which has contributed to Nigeria not tapping into these resources as we ought to do.
All right. So, what are you seeing? Going forward, is it a no-brainer? These prices will remain elevated throughout this year.
Yes, according to EIU, they were saying that the price is going to remain elevated even till 2026 because of the strict restriction when it comes to environment in some countries, and due to the decarbonization campaign that is going.
All right, well, we have a little internet issue there, definitely. But Jibola was trying to make a point on what to expect for copper prices going forward. All right, so Jibola, thank you so much. Definitely, we'll keep tracking to see how prices move for copper. She's analyst with Financial Derivatives Company. Thank you so much for coming on.
All right, thanks for having me.
All right, so with a total of 32 airports in Federation, the Federal Airports Authority, FAAN, is seeking ways to enhance service delivery across the country's aviation sector. To drive these projects nationwide, FAAN has put together a stakeholders summit in Lagos with various business partners in the airport to discuss and find ways of developing policies and activities to help achieve better service delivery. According to the FAAN Managing Director, measures are being taken to ensure that the Nigerian aviation sector meets international standards. Our correspondent Dominic Iwewu reports.
The Federal Airports Authority has called for a stakeholders meeting in Lagos, held at the Sheraton Hotels, to build a healthy relationship within the Nigerian aviation sector. With the theme, Strengthening Partnerships for Sustainable Growth and Development, FAAN seeks to validate its mandate.
Yes, there will be this aspect where we will talk to you, tell you the initiatives that we are looking at undertaking in FAAN, what we've done so far. We'll tell you where we're coming from and where we're going to. But we also want to hear from you. You have been in the airport environment way longer than we have, at least this management. So we would love to learn from your experiences.
For the FAAN Managing Director, the dialogue will serve as a platform to forge stronger alliances.
I challenge the Director of Business Development and Commercial every day to say that I feel like I work for her and her department. Because I get a lot of calls from operators, concessionaires, asking me about applications, asking me about payments, renewals. And for me to be getting those calls, it means that we need to do something a bit differently, really to improve that process. One of those is what she mentioned as the retail platform, which I pleaded for, because even for me to give some of those approvals, I really need to understand what we have at the terminal. And what's more important to me is really the retail mix that we have, which will help us improve the passenger experience.
She highlights major renovations that will be made at the Murtala Mohammed International Airport, Lagos.
Also being security conscious, we have started the pilots in Lagos. We're going to be rolling this out across other airports and of course across all of our different lines. There's a lot of investments that have gone into our infrastructure upgrades and automation specifically. So we spoke about using ECR devices.
All right, for our DSTV viewers, there we're joining live coverage now as Governor Hope Uzodinma presents State of the Affairs to the Imo State House of Assembly. Venue is the State House Assembly new complex in Owerri, but this continues on other platforms. All right, so let's get a check on what's happening with other matters. Now, definitely, we're seeing currencies in West Africa and most of Africa there. We're seeing the Ghana CD in 2025 to experience a remarkable turnaround, appreciating by roughly 40 to 50%, reaching around about 10 Ghana cedis to the dollar. This surge has bolstered fiscal resilience and curbed inflation. But how much of a risk is geopolitical tension in the Middle East for the best performers and some of the underperformers at this time? Joining us to discuss now, we have Patrick Barr, Bankwise, a global investment consultant. Great to have you on the show, Patrick.
Thank you very much, and good morning.
Yeah, so it's quite the run the Ghana city has had so far in 2025, about 40 to 50% jump. How's it feeling, there in Ghana, seeing this strength of currency?
I think it's been positive news so far since I think it started somewhere later part of March of this year. It's coming all the way, seeing the appreciation of the cedi against foreign currencies like dollars, like pounds. It's one that has been able to slow down inflation drastically over the last 3 months. We've seen prices of some commodities dropping significantly within the same period. And we see the prices of cars, especially at the port, also stabilizing and some of them even dropping. So I think that generally we are seeing an improved cost of living because of this particular appreciation of the Ghana cedi against the dollar and the pounds.
Now, talking about the inflation coming down there, is it being felt in the stores in Ghana?
Yeah, I would say that we are experiencing the impact of the inflation dropping over the period, at least for the last 2 months. I have gone to market several times where I see prices of commodities drop from what I used to buy in the past to the current price. It's not just an price going up in terms of the rate, but also how it has stabilized the price. And for some commodities, especially food items, we see the prices dropping when you go for the larger quantity.
And looking at the run so far, what would you say could be a headwind for this performance we've seen for the Ghana cedi? We're still a lot of talk about geopolitics right now. We're seeing how that's roiling some markets at the moment, even though we have that talk of a ceasefire.
Yeah, so I think that the factors that have contributed to this particular performance so far this year, I would say there's a number of factors. Of course, the first factor we know is the trade war that started with America and other developed countries, where some countries began to not trade in dollars, and for that matter, the pressure on getting dollars went down for a country like Ghana. Then government also introduced what we call the gold for oil, or the gold board program, where government is able to now aggregate all gold and be able to export it through a particular angle, which means is that we're able to have a lot of gold reserve as a country. That is also one of the factors that's contributed to this. Again, we're also looking at Bank of Ghana, which is a central bank in Ghana, injected a lot of some amount of foreign exchange into the market, and that has been able to ease short-term demand pressures that comes with some of this particular times of the year that we need so much dollars for those who are doing export and also repatriating of dividends for foreign companies. That has also been one that has helped the country. Again, there's less speculation when it comes to the rate of dollars as we speak. So a lot of people who in the past would be speculating the rate of dollar going up, and for that matter, hoarding dollars, are also doing that on a low key. It's not being very huge on that front. Again, you can also talk about the debt restructuring program, which was started by the previous government, where we needed to restructure some of our debt, especially debt that are in dollars and pounds. That means that the pressure that we need to mobilize funds to pay interest and principals on these bonds have now gone down drastically because of that restructuring program. And of course, as you are rightly aware, Ghana is under IMF program, and that also gives some of extended credit facility agreement over the period of time. And if you heard, about 2 weeks ago, Fitch also upgraded Ghana's credit line in terms of our rating upwards. That also leads to investor confidence will come in foreign currency. That also helps to stabilize the local currency. So these are a number of factors that have contributed to the performance that we are seeing on the Ghana cedi so far this year.
All right, so definitely we're having little interruptions there with the connection, but Patrick, with what we're seeing so far with the Ghana cedi, do you think that at this point that some of the underperformers, that's most of the currencies not really performing well in Africa, do you think at some point in 2025 these currencies might get some kind of break?
I think so. I think most currencies should begin to look at factors that they can put in place, just as we are doing in Ghana, to stabilize currency. I think that most African countries that have mineral resources like the gold, the oil, should begin to look at ways that they can collateralize some of these resources to stabilize their currency. That is one of the factors. Then again, trading among ourselves in Africa is also one of the ways to stabilize our currency, as against going to buy some of the goods from European countries, foreign countries, American countries, where you need to now convert to local currency into manage over a period of time.
All right, so I guess, seeing what's playing out in Ghana, we're seeing inflation rates, coming down. The currency is showing remarkable strength in the first quarter of 2025 up till now. I guess it's safe to say that the Bank of Ghana, have it easy this year.
Yeah, so far so good. I would say that so far their performance has been quite good. But as you all know, whenever there's a change of government, some of these expectations are things that we see. It now bestows on Bank of Ghana to ensure that this performance is sustained over a period of time. We don't want to see this as short-lived, where we begin to now give excuses like, as we have seen so far, fuel prices are expected to go up, and that put pressure on the local cedi. These are things that Bank of Ghana should have a buffer to manage them, so that the performance and the successes that we are enjoying today will not be short-lived, and one that will just be eroded by the cedi depreciating again.
All right, definitely. We'll keep tracking to see how the Ghana cedi maintains this trajectory we've seen in the first quarter of 2025. But thank you so much, Patrick Bankwa. He's a global investment consultant joining me from Ghana. Thank you so much.
My pleasure, sir.
All right, let's look at other stories now. The Industrial and Medical Gases Nigeria PLC have secured shareholders' approval to raise 6.5 billion naira through a rights issue as part of its plan to strengthen capital, expand operations, and deepen market reach. The approval was granted over the weekend. The extraordinary general meeting held immediately after the company's 65th annual general meeting in Lagos, where shareholders also endorsed a dividend payout of 400 million naira, translating to 80 kobo per share. In addition, a bonus issue of one new ordinary share of 50 kobo for every 10 ordinary shares held. That was also approved. All right, we'll take a break now. When we come back, we'll have more conversation on investor sentiment right there with Geopolitics on the front burner. That's in a moment. Just stay with us. And the recent escalation between Iran and Israel, that triggered a pronounced risk-off shift in global financial markets during the week ended. That was earlier, around June 18. Investors withdrew nearly $19.8 billion from global equity funds, the largest weekly outflow in 3 months, with U.S. equities alone seeing about $18.4 billion in redemption. In contrast, safer assets rallied. We saw bond funds tracked at approximately $13.1 billion, and gold and precious metal funds gained around $2.84 billion. This classic flight to safety pattern reflects intensified geopolitical risk appetite, adding volatility to markets as we've seen oil prices plunge today, even though prices were staying elevated the week before. But things are unfolding, at this point. To help us unpack this now, we have Isaac Marshall. He's an investor with TLG Capital. Hello, Isaac. Great to have you.
All right, okay. Good to see you, Lottie. How's it going?
It's going good, Isaac. So, definitely it's all about geopolitical anxiety at this point. Is that all that's driving sentiment, with institutional investors, or do you see other factors like, U.S. trade policy, amplifying, what we're seeing with investor sentiment?
It's a really interesting time we're in, Lottie. I think there's a book by a gentleman called Larry Livingston called Reminiscences of Stock Market Opera. And what's fascinating about the book is that it's written back in the 19th, even actually part of it is even said 1890s. So he was a famous trader, more than 100 years ago. And would often shift in different directions purely based on sentiment and not because of fundamentals. You would see markets dip and then markets float up because when it was a bear market and people were selling, then everyone would sell. When it was a buyer's market, everyone would buy. And I think a lot of that is really what you see is the reaction to the current geopolitical tension. I think a lot of it is momentum trades. And I think at the same time, you shouldn't underestimate momentum. I think momentum is an extraordinarily powerful force in how markets tend to operate.
And, definitely we like to track, what institutional investors are doing, at this time. What are you seeing, so far? Now we're getting some kind of de-escalation, but we know how news is still unfolding at this point with the geopolitics there.
Yeah, I think, look, at the moment, again, we're an Africa-focused shop. Right. So I think for us, where we see the current situation is that in a very interesting way, the volatility in the markets have actually resulted in stability in some of the macro in Africa. If you think about it, about 80% of the exports of Nigeria are oil. Right. And when you have a situation where there is tension like there is in the Middle East, and also there is the expectation of future volatility, which impacts the pricing today of both the underlying asset and derivatives around the asset. You have a situation where the prices of commodities and oil will remain elevated. I think Goldman Sachs was looking at a report where if the Strait of Hormuz sees the impact that may be anticipated, you could see $100 plus oil prices. So at very least, whether that comes to happen or not, I don't think anybody can predict. Even the best security analysts might struggle to guess at what's going to happen in the current regime of international affairs. But I think what we do know is that volatility itself portends to higher oil prices, higher commodity prices. Those commodity prices in turn support macroeconomic stability in African countries. I mean, the big thing that folks are always worried about with Angola and Nigeria is that, okay, oil prices was lower, maybe that impacts some of the sovereign debt sustainability, which is, I think right now, no one has any sense that oil prices are going to stay low for a long period of time. And so for us, an interesting way, the market vol makes us more comfortable in the macro because commodity prices tend to improve economic performance in African markets.
All right, so at this point, where do you think investors be looking to pile in cash now, especially like funds, like yourself? Are you still keen on entering some of the African economies so far?
Yeah, it's a good question. I mean, I think at the moment, if you remember, we spoke first about this. What is it, like 8-9 months ago? I think I personally and my firm, we've all been quite bullish on Nigeria for at least the past 9-10 months. I think we initiated a number of positions. We started a fund in local currency, and a lot of that was just on the conviction that when the naira was priced 1750, 1800, that represented a really attractive entry point. I think you've seen a ton of macroeconomic stability enter the Nigerian market. Not to say that that's felt by the everyday person in Nigeria, unfortunately, right? I think the reality for everyday people in Nigeria is still extremely tough, and I don't want to pretend that that's not the case. At the same time, I think there have been a lot of really quite orthodox policies that have been adopted by the government, sort of, reduce expenditure, take steps at improving the revenue collection base, things that folks have been talking about need to happen for a long time. But then also there have been some really unorthodox measures, right? I think the Central Bank of Nigeria has really been vindicated as doing a fantastic job at bringing stability to the banking sector, at preventing what seemed like uncontrolled inflation, and also at stabilizing the currency, which, a year back we all thought would just keep free falling. And, we've basically seen about the 9-month mark of a relatively stable currency. On the back of that, you see a lot of people trying to build. I see a lot of folks looking at making acquisitions, a lot of activity beginning to happen. I think international investors are still afraid to participate in the market because of the previous fall. But we just think it's a great entry point right now, especially where yields are. I think Ghana has been another good entry point. It's something we talked about, I think, 4 or 5 months back, and has also really played out in the improvement of the currency. I think there's a lot of optimism, and sentiment just plays a really, really powerful role at when it makes sense to get your entry point into these markets. I think both Ghana and Nigeria are coming out of very, very challenging couple of years of macro. In fact, across Africa, post-COVID, post-inflation, has hit everybody really hard. In Kenya, I think you're seeing more stability, but Kenya, I think, is a slightly different kettle of fish because, there's a lot of questions about what the political administration is going to look like. And, the youth continue to exercise their conviction that they are looking for government officials to serve them. So I think it's really quite country specific on one hand, but generally speaking, I think that a lot of African countries are coming out of economic difficulties, and as a consequence, we're generally optimistic across the continent.
Right, and talking about most of the African countries that are coming out of difficulty at this point, with what we're seeing play out in the Middle East, do you think that could be a major headwind, at this point for most of these economies? Heck. And you've seen that Ghana, CD, their best performer, so far this year with the currencies.
Yeah. I mean, to your point, Lottie, I heard something really funny. Someone was flying to Nigeria for the first time, and their flight was going via Dubai, and they were concerned about, going through Dubai. And when an American is more concerned about flying through Dubai than flying to Nigeria, then that obviously portends well for African countries. So I think it's really, really positive, to be honest. I think the volatility has a silver lining where, as long as African countries can and African entrepreneurs can continue to build and take advantage of the opportunities, of every opportunity that they can, I think that there's a real opportunity to demonstrate that Africa is a uncorrelated market, is a risk profile that is different and is distinct from the rest of market assets, which basically have experienced broad-based fall really since the election. And so I think there's a ton of opportunity to basically see Africa as a much safer market in a context of a more dangerous world.
All right, definitely. What do you see, going forward now for the rest of 2025, especially for the CD, the Ghana CD and the Naira?
That's a good question. I mean, look, I think where I feel comfortable is, as a firm, we don't think that you'll see more steep depreciation. I think that you could see some depreciation because the reality is that inflation figures in both countries are still elevated. And you still have, it's still a very challenging economic environment in the sense that the way that you tackle inflation is that you make more goods and services locally. You reduce your imports, because as long as you're importing tons of goods, you're continuously creating selling pressure on your currency to buy the dollars that you import the goods in. So I think while there's a number of positive developments, I don't see manufacturing, I don't see electricity provision. I don't see sort of these security concerns at a very fundamental level improving markedly. And until and unless those conditions improve, it's very difficult to say, with confidence the currencies are going to go up. But there's been enough depreciation that I think you're sort of on a stable base now where you can build and the rates of return will exceed where the currencies have lost. And that's sort of the view that we take, particularly as a lender where we can get a fixed return and also hedge our investments.
Fantastic. That's a good place to anchor it there. Thank you so much, Isaac Marshall, an investor with TLG Capital. Thank you for coming on today. All right, now let's get a check on what's playing out. Let's get a check on what's playing out with the markets now. We have Willie Bonga with the details at this point. Good to have you, Will. How's it looking over there?
Well, markets are looking a bit chirpy following that ceasefire between Iran and Israel. Well, it's effective according to President Trump, but we see Israel saying that Iran has breached the ceasefire, it's not honored it, so just hope that there's not much volatility. But markets are rallying. Major stock markets in Africa were positive at intraday. Nigeria's NGX was positive. We see it up 0.32%, and that's 2 consecutive days of gains this week. JSE in South Africa was also trading higher, up at 0.69%. Elsewhere, Egypt's EGX was also up. Index was trading in the 3% levels. That's a lot, especially with what's going on in the Middle East right now. Now, meanwhile, Nairobi Securities Exchange closed Monday session in green territory. And away from equities now, let's just look at the fixed income space here in Nigeria and see what's happening in the bond market. We had an auction yesterday. Chuka Nwachukwu, Chief Dealer, Group Head, Trading UBA, joins us to discuss this. Chuka, it's good to have you on the show.
Thank you, Willa. Good afternoon.
Chuka, we had the DMO offer, let's say 100 billion naira in Monday's bond auction. And when we compare that to the 300 billion naira that was offered in May, this appears to be a huge reduction, don't you think?
Yes, thank you, Will. Like you mentioned, there was a bond auction yesterday. Maturities were 5 years and then 7 years, 2029. And then new revision of 2032. Yeah, 100 billion was offered, like you mentioned, and then well over 604 billion was the subscription. However, they sold 100 billion that was offered, and that made the yield, drop significantly. We saw about 123 basis point drop from the 2029 bond. The thing is that DMO has consistently, like I always say, concern about reduction in terms of debt repay, and that will actually affect the yield and all that. So for me, what they have done is just to show us the intention. The yield, like I said, dropped about 123 basis points, and now that's has affected the market in a sentiment. We have a yield today. Currently, we have 5-year bill and bond and 7-year bond trading about 16 upper 16 levels, 17.5. So that obviously has affected sentiment in the market.
So what's this game plan of DMO? Is this a strategy to reduce borrowing cost or borrowing generally in the market? We did see that result, that outperformance result yesterday that the federal government said. We saw that 31% drop in the performance for the budget, 2024 budget. But does it tie back to the DMO's plan to reduce borrowing domestically, or is just a strategy for long-term borrowing, maybe higher borrowings in maybe say third or fourth quarter?
So the government has several ways of raising funds for either infrastructural development, and then I think that they have also offered a special bonds like a Sukuk bond, which is used to develop special projects. DM over time, if you watch from last year, they've been consistent in terms of reducing the yield. It's only on OMO, which obviously is handled by CBN, you have higher yield. So I think it's the part of their strategy, the strategy to reduce borrowing costs. Don't forget that our debt, we spend almost close to like 8% servicing debt. So it's a great worry for DMO. And also to also, it's an indication as well that they have other source of borrowing. And so they are not depending solely on the fixed income market, which is local market. I think that they have inflows coming in, especially from the FPIs and all that. So for me, it's a strategy to continue to reduce the amount, the cost of borrowing. At the same time, also try to help government to meet its obligations.
Okay, still speaking of bonds, we saw the NGX and the IFC, that's International Finance Corporation, renewing commitment to expand the issuance of labeled bonds in the Nigerian market. Can you tell us more about that and how that feeds into the larger market sustainability in terms of bond issuance and maybe debt sustainability?
Yeah, so over the past few years, there has always been the talk of green energy revolution, and all that. So basically, this partnership between IFC and it's to help drive that initiative. It's just basically just like a sukuk bond. It's used for a special project, and this time the project is on green energy. So it helps. This partnership will help to train investors, help to train them stakeholders, as well as let them into what is expected of them, as well as the government. So it's a special project which I think in line with every government obligation or expectation, to gradually reduce the pollution, and then play more on the green energy side. And so the project itself, the bond itself, is just to raise special funds to be able to tackle green energy. And of course, we know what is happening with the climate change. Climate change is a huge problem. And so this green energy initiative is to help raise funds to be able to tackle some of the issues that is associated with the climate change.
Definitely, we did see that oversubscription for the green bonds that was issued last week from the DMO. I think investors are, taking the bites. They're happy with it. So we'll see how that helps sustainable financing, the infrastructure development in the country. But let's look at market liquidity now. How is that influencing trade at intraday? What stocks are investors? Oh, not stocks, equities now. What instruments are investors playing at the moment?
Yeah, market liquidity is currently on the negative of about 44 billion. Yesterday it opened in positive of about 1.4 trillion. However, a lot of liquidity left the market. That also has affected trading. We've seen a lot of bearish sentiment. Traders trying to to take profits, especially with the yesterday's bond auction, which dropped yields significantly. So it's time for traders to take profit and at the same time to generate liquidity. So over the week, over last week, so towards the end of last year, precisely on Friday, coupon payments was made, which obviously boosted liquidity in the market yesterday. But today, like I said earlier, the market is in deficit about 44 billion, and that will really greatly affect sentiment in the T-bills market and then in the bond market. The instrument that are currently investors delight is the one that we auctioned yesterday, especially the 2032. There's been a lot of demand on that bond, excuse me. For the bills, we've seen also demand in the last year. The last 1 year auction that came out last week. Investors obviously are more interested in the 1 year, and that obviously will obviously push the yield further down because of the sentiment and then because of interest in those two securities. So for bills, the 1 year that came out last week, and then for bond, 2032 bond, I think the most traded in the market today.
I can only imagine how it is in the secondary market for players there. Thank you so much, Chuka Nwachuku, Chief Dealer and Group Head Trading at UBA, for joining us on Business Incorporated.
Thank you, Will. Thank you so much.
So let's check out other major equities in the Middle East now. We're looking at the green trade at intraday. Dubai is up. They're trading over 3%, 2% levels. See Dubai up 3.24%. Abu Dhabi up 2.26%. This is coming, following Donald Trump's announcement of the ceasefire between Iran and Israel, and it's effective today. Let's see how that plays out if market sustains this gain. Saudi, let's look at other regions, markets in the region. You see Saudi also up at intraday, over 2% as well, and Qatari 1.93%. Stock futures in the U.S., let's look at how that performed. Stocks rallied today following that announcement of a ceasefire. We see stocks up. Dow Jones 0.68%, S&P futures up 0.77%, and Nasdaq up 0.97%. Now, despite the ceasefire, both Israel and Iran have accused each other of violations. However, the market appears to be moving past the geopolitical risk, with investors shifting focus back to earnings and the July tariff deadline. Meanwhile, attention turns to Fed Chair Jerome Powell, who is set to address Congress. His comments come as the White House pressures the Fed to cut rates, and with some officials hinting a rate cut could come as early as next month. So let's look at Asia. How did the market perform? How did they close today? They did rise after that announcement of a ceasefire between Israel and Iran. Looking at the stocks, we can tell Nikkei jumping 1.14%, and the Kospi in South Korea up 2.96%, and the Hang Seng in China also up 2.06%. Mainland China is not left out. This was up 1.15%, and the Nifty 50 in India closed up as well, 0.29%. So much is happening. Stocks are rallying. FTSE 100 is out, rallying over. So EU stocks are also rallying. So the ceasefire is probably the best thing that could happen to stocks at this moment, but hopefully it sustains. That's what we're hoping for.
Yeah, that's what we're watching and waiting and seeing, at this point. Thank you so much, Will, there for the details. What's playing out with those markets that we track. But let's take it on to Europe now. We see Germany's new government is set to approve its budget with plans to invest record sums in defense and infrastructure. That's according to media reports. That marks a shift in German fiscal policy. Our DW correspondent, reporter Jibelu, joins me now. Great to have you, Chip.
Yeah, nice to be here, Laddie.
So what can you tell us about the plans?
Well, in terms of the plans, the government's budget has been passed by the cabinet, and spending is expected to be increased by around 6% to 503 billion euros this year. And a big part of that is for infrastructure spending and defense. Now, after the 2025 budget, of course, having it been gone through the cabinet, it will now be introduced to the Bundestag, which is Germany's lower house of parliament, in mid-July. So that is before the summer break. And the final approval is only expected in September. Now, the increase in spending could help boost Germany's economy, which, of course, has been struggling after consecutive years of recession. And the outlook this year has been, of course, negative so far, also in part due to some of the uncertainty surrounding global trade amid the trade dispute between the United States and the European Union.
So what exactly is the government planning to spend on?
Well, I mean, there has been criticism in terms of what the government is planning to spend on. It's planning to increase spending for defense, as I mentioned. That's supposed to go up. Around 400 billion euros will go to defense over the coming years, and 500 billion will be going to infrastructure spending. So that is what most of the spending will be going to. And there has been, of course, some criticism as well regarding that, Ladi.
So will this help, jumpstart the German economy?
Well, their criticism has been, of course, coming from the opposition parties in particular, and their response has been that the government's spending plans won't be doing enough to help the German economy. The Green Party, for instance, says that these plans will maintain the status quo, and they will not do much to change Germany's economic model, especially if it is to become more innovative when it comes to sustainable technologies. And the Left Party, for its part, is critical about the spending plans on defense. it says that future generations will be forced to pay back for the many in billions that will be invested in weapons and tanks. And there have also been economists who've pointed out that while the spending plans and the borrowing is a welcome thing for Germany, the money would be better spent in other areas because that's where it could maybe generate more returns for the economy. And that would be areas like the education sector and, of course, innovation and technology. And while the markets, of course, initially cheered Germany's U-turn on its fiscal conservatism in March after the Bundestag reformed the country's borrowing rules, we have seen from the recent economic data in recent weeks that the spending plans haven't generated much of a change in the economic data that we are getting. So in terms of jump-starting the economy, maybe the answer for now is no, and maybe we will find out what's going to happen in terms of those plans and how they actually do affect the economy later on in September when they are approved. So going forward, but so far it hasn't done much to help the German economy.
Right. I guess there's a wait and see there. Thank you so much, Chip, for giving us details of what's playing out in Europe. All right, so other stories now. We see the Competition Authority of Kenya. They've issued a stern warning to landlords and asset managers who entering into exclusive contracts and blocking competing internet service providers from residential properties. Under the Competition Act, such anti-competitive practices violate sections 21, subsection 1 and 21, subsection 3E, limiting tenant choice and stifling innovation. Offenders now risk fines up to 10 million Kenyan shillings or 10% of their gross turnover, and even prison sentences of up to 5 years. The CAK has urged tenants to report violations through its portal or via email. And the Zanzibar government is in advanced discussions with Egypt Air to launch its first ever national airline, marking a strategic initiative aimed at boosting inter-island and international connectivity. Deputy Minister Nadir Yusuf confirmed that preliminary agreements have been reached under a framework with Egypt Air to assess the venture's feasibility. Separately, scheduled Pemba flights are set to begin in July using the Q300 aircraft, further enhancing the archipelago's internal air links. Well, let's get a check on what's playing out with other markets now. They're talking about the crypto market. Definitely, we've seen some kind of recovery there with Ethereum. We did see a jump there with Bitcoin also trying to get back up. If you look at the screen, right now is green on the screen. Looking at Bitcoin, $105,000, 3.8% up. Ethereum, $2,419. So it's mostly green, right now from the dramatic drops that are seen over the weekend, and definitely just like what we saw in the oil market with the ceasefire talks there, we saw a big drop with oil prices. So we did see that happen over the weekend because definitely cryptocurrencies that trades 24/7. There are no breaks, for the crypto market at this point. But we're seeing a recovery right now with deep green with most of the altcoins that we track. And that's according to Coin 360. The pockets of red you see there, those are stable coins, the USDS and USDE. Those are the ones in the red, at this point. But it's majorly green there, and I'm guessing it's on the back of the ceasefire talks there. So it's a risk asset, at this point. And we know geopolitics, that impacts movement to safety and risk assets. Well, let's talk more now to Motolani Omotu. He's a Web3 specialist joining me right here in the studio. It's great to have you.
Thank you very much.
Yeah, so I'm guessing you're seeing green on the screen at this point, and I'm sure, crypto investors would be even a heavy sigh of relief.
Yes.
At this point. So do you think the crypto market is out of the woods, right now when it comes to those price drops with what we're seeing with geopolitics?
Yes, I think the crypto is out of the woods because you would expect that before now you would expect that the Bitcoin or the crypto market is going to go down because of the macro activity that just happened. But the fact that these people are running to like a safe haven, they now see Bitcoin as a safe haven. It's now like a store of value. So they tend to like run to Bitcoin because they don't know what can happen in their country as regard Iran. They don't know if local institutions are going to shut down, or they are going to be sanctioned, or they are going to be restrictions. So the easiest place they can run to is Bitcoin as a store of value.
Right, and talking about running into and running out of, right now we're seeing a run out of stable coins, at this point with the reds there. So do you think the bull market is back on here, or is this just a dead cat bounce at this point?
Okay, so I believe it's just a short retracement because of the macro activities that just come down on. The stablecoin market industry is still booming at this point, and a lot of players are now entering the stablecoin market. So I believe this is just a macro short rundown. If you look at the long run, it's still going to be a market that grows. Green.
That's for most of the stable coins,
yes,
at this point. But generally, we're seeing, the likes of XRP, further back up above the $2 level, $2.17. That's for XRP. So, how do you think, smart investors should be navigating this kind of market, at this time, knowing that, there's still geopolitical tension, in the Middle East?
Okay, so for investors right now, there are three segments or sectors that are currently booming. So we have the Bitcoin because of the store of value it has, and then we have the payment industry that utilize stablecoin. The market is still growing. The market capitalization is growing every day. So I would tell smart investors to go into Bitcoin, the payment sector that utilize stablecoin, and also custodian digital financial assets where they tokenize treasuries. So smart investors can look at those three parts in the crypto sector.
Right, and I know you play a lot in the Web3 segment. What's happening there? At this point, it seems it's gone quiet, since the year started.
Well, it has not gone quiet. I just told you what is happening there. These are the three places that, a lot of people
are coming in. That's for Web3.
Yes, that a lot of people are coming in. We are seeing like institutions now, adopting blockchain infrastructure into their financial services. We're seeing, more sovereign entities now trying to also add Bitcoin to their treasury. So Web3 is not quiet. It's just that it has more regulation. So everything is now streamlined to like a particular point.
And how are Nigerians doing when it comes to getting some of these Web3 jobs? Are they still, is there demand for, Nigerian workers, in that Web3 space? What are you seeing?
I believe once you have like the skill, you are good to go. If you don't have the skill, you won't be called for. It's just, basic. It's just very basic.
What kind of skills are we talking about here?
We're talking about, community management. We're talking about social media. The creative economy right now is booming. So once you're like, a content creator, video editing, graphics, those areas are booming. And, the way things are working right now, people are more, people want to see videos, short reels, videos. So if you're in the creative economy, you can, tend to look at that. And beyond that, we have, marketers, we have, the developers, the people that work back end and the people that work front end.
Right.
So,
well, what's the salary like, for most of the segments in Web3?
All right. So depending on your years of experience, so if you come in, you could start as low as, $200, and also you could,
per month?
Yes, per month.
Okay.
Or sometimes it could be bi-weekly. So
that's fine.
With that, you could also earn as high as $1,000 to $6,000 per month with, other benefits and, token.
Up to $6,000 per month?
Yes.
Wow, if you look at the conversion, that's a lot of money.
Yes.
That's operating in the Web3 space,
yes, in the Web3
at this point.
Space, yes.
What do you think is the best advice for someone that's looking to get into Web3? At this point, what would you say, the first thing to do? I
think the first thing you have to do is learn. Make sure you learn, because I've seen where most time people who do not have like basic skill, they finally Nigerians, they prepare for the interview, they try to work up, and then you end up getting the job, and you can't perform, you don't have results, and you're kind of like tarnishing the image of everybody. So if you're trying to get into the job market in Web3, make sure you learn and make sure you understand the skill that you're coming to work for in the Web3 industry.
Right. Yeah. Understand what you're getting into. Yes. At this point. Thank you so much, Motolani Motu is the Web3 specialist. Thank you for joining us today.
Thank you very much, Ladi.
All right, so that's how most of the markets we track are looking today. Definitely will give you more updates. I'm sure investors still watching out for what's going to be said next, at this point when it comes to geopolitics. But we'll give you, again, updates on what's playing out with most of these markets tomorrow. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.